Now, after a quick search on YouTube, typing in Dividend Snowball, it seems like there's tons of different dividend growth investors talking about the fact that the Dividend Snowball is a thing, of course, and will start to really take place at a certain amount. Now, I'm not trying to take shots, and absolutely no disrespect to all these different investors for the most part that are talking about the Dividend Snowball. But the reality is that the snowball effect, the real dividend snowball effect, doesn't take place until much later on than most of these YouTubers are talking about. Now in this video, I'm going to give my 2 cents on the dividend snowball, what the dividend snowball is, and when I started to feel the dividend snowball take place in my 7-figure plus portfolio, which currently pays me north of $6,800 per month in dividends. Now, even though the dividend snowball is a trendy thing to talk about, I mean, it's all over YouTube, you see it all over the place, I still think there is a lot of good lessons to learn when it comes to this strategy, basically how you compound your portfolio to a massive level later on, which is exactly what we're going to talk about in today's video. So if you want to hear my take on the dividend snowball from a 7-figure dividend investor that actually is really living the dividend snowball effect as of right now, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now first, just so we're all on the same page here, let's go over some of the basics. What is the dividend snowball? What is this that everyone's always talking about? Now it says right here, the dividend snowball is simply a process for reinvesting the dividends you earn from assets such as stocks, ETFs, and REITs. Essentially, you take the distributions you've made from those securities and use them to buy up more shares of them, etc. As you might guess, purchasing more shares means earning more distributions. So with each new round, you add another layer of value to your holdings, wash, rinse, and repeat. Over time, your portfolio compounds like a snowball rolling down the hill, hence the name. And eventually, its size multiplies several times over where it originally started, far beyond those who chose not to reinvest their dividends. The dividend snowball goes by other names as the more commonly used term DRIP or dividend reinvestment program. However, DRIPs were typically stylistic of loyalty programs where investors bought stocks directly from certain issuing companies, usually blue chips, and then reinvested the dividends with the same company at a discount. This was before trading apps like Robinhood leveled the playing field with $0 commissions and fractional shares. Today, the dividend snowball essentially builds up the same process as DRIP. However, it can be used with multiple different types of securities and spread all over an entire portfolio. That's a very good explanation right there, I would say, and I like the fact that they added in that building a dividend snowball doesn't necessarily mean that you're reinvesting back into the same exact stocks or ETFs. For me personally, I reinvest my dividends that I get paid on a monthly or quarterly basis into whatever different dividend paying stocks or ETFs I really want to buy at that point in time. Sometimes they're the same, sometimes they're different. It just depends. Now to walk you through how does a dividend snowball even work. To get started, let's use the following assumptions. Our initial investment will be $12,000 or 100 shares of a fictitious $100 stock. We'll invest it for 10 years. The stock will pay a 3% dividend on a quarterly basis. Each of the years will also reinvest another $12,000 or $1K per month into the same stock. The dividend growth rate will be 5%. The share price of the stock itself will also appreciate 7% each year. Taking that all into account, what would our portfolio look like both with and without reinvesting dividends? So with reinvesting the dividends along the way, building that snowball effect, $237,582. Not reinvesting the dividends, $189,000. So basically, by reinvesting the dividends over this 10-year time period, an investor would have returned an extra $40,000 to $50,000, which is outstanding. So now that we're all on the same page, we understand basically fundamentally what the dividend snowball effect is, or what reinvesting your dividends long term is supposed to do for your portfolio. Now to get into more of the real life situation. I personally have been buying dividend paying stocks and ETFs for almost 8 years now, buying shares of different stocks and ETFs that all pay dividends across multiple portfolios day after day nonstop until the point to where I currently have certain positions with several thousand shares in there. Now, I'm by no means saying that I have the biggest portfolio on YouTube or the biggest portfolio in the entire world. I'm not by any means saying that. But I am saying that this is the actual effect of buying dividend paying stocks and ETFs basically every single trading day for several years with the amount of cash balance that, of course, I had available. Now, like I said, there's certain investors out there that I'm aware of, that I'm even friends with, that might make more in a few trades than my entire portfolio is worth. So again, I'm not saying that my portfolio is the best or the biggest, but I do have a lot of wisdom to share when it comes to the snowball effect and when that sort of takes place throughout the dividend investing journey. Now, at least for me specifically, and of course I can't speak for anyone else, I really started to feel the snowball effect during a few different time frames. The first time that I've really felt the snowball effect take place, when on a monthly basis I was earning enough dividend income to buy a share or two of whatever stock or ETF I was looking to purchase on that given time frame. So for example, Realty Income stock, one of my favorites, I currently have almost 3,000 shares of as of right now. Realty Income stock has clearly been one of my daily purchases for a while over the last several years. And I will say that once the portfolio got to the point to where I could purchase a share or two of Realty Income with dividends paid from the portfolio on a monthly basis, that's one of the times I really felt like we were starting to slide downhill and the snowball was gaining some momentum. Now, the next time after that was probably when the portfolio hit a milestone of $100 or more on a monthly basis on average. And then honestly, there probably wasn't another milestone that I felt much change until the portfolio probably hit $1,000 per month in dividends. Now, at that point, $1,000 per month could not only cover a bill or maybe a few bills within my expenses at least, but also with $1,000 per month, it can definitely buy you a decent amount of more stocks or ETFs across the market during that monthly time frame, which then would pay you even more in dividends moving forward. So after $1,000 per month on average, I would say that's another milestone where I really felt the snowball effect kick in. Now, if we were to fast forward from $1,000 per month in dividends to now nearly $7,000 per month in dividends, there was definitely different milestones, different moments where I felt the snowball really starting to roll downhill a lot quicker. But I will say it probably wasn't until this portfolio was earning, let's say, north of $5,000 per month to where I felt a big change. Now, at that point, I could basically purchase stocks and ETFs every single trading day throughout the entire month and purchase more stocks and ETFs with only the money that I was getting paid from through dividends and distributions from more stocks and ETFs. Now, honestly, for me at least, at that point, everything started to change because there wasn't really a need for me to add more outside capital into my portfolio. Obviously, over the years, I've been depositing money from my active income into my portfolios to juice them up a little bit and, of course, to purchase more stocks and ETFs a little bit quicker. But I would say after the portfolio was to the point to where it was earning over $5,000 per month, at that point, it feels like the portfolio literally has a mind of its own and a life of its own because you can purchase a good amount of stocks and ETFs with, say, $5,000 on a monthly basis. Now again, maybe you can't purchase hundreds and hundreds of shares per month, but still adding a few shares of this, a few shares of that every single trading day really adds up and really starts to compound your forward monthly dividend income very quickly. So to back up, I would say probably, at least for me, going off of the last 7 or 8 years of my investing journey, I would say when the portfolio hit $100 per month on average, as far as dividend income, that was a big change. Then honestly, from there, once the portfolio started to earn north of $1,000 per month on average, that's also where I felt a massive change. And then lastly, more recently, this is when the portfolio started to pay me north of $5,000 per month. And as of right now, almost $7,000 per month, that's when the portfolio truly seems to have a mind of its own. And the biggest difference now is that I really don't have to worry about adding any outside capital to the portfolio, and it will still grow just off of reinvesting the dividends into more dividend paying stocks and ETFs from the dividends that are paid from it. Now, I'm hoping that once the portfolio reaches a new high of maybe $10,000 per month on average in dividends, and this is hopefully within the next few years, hopefully there's going to be another visceral change. But I specifically remember feeling multiple different times over the last several years where the portfolio's energy almost shifted and where the dividend snowball all of a sudden compounded to a brand new size moving forward. Now, this is all to say that this is just my journey. This is just my thoughts. Everyone's going to have their own way of looking at things. Maybe for some investors out there, once you get to the point to where your portfolio can cover your mortgage, or maybe once you get to the point to where your dividend income can cover your car payments, maybe that's when you'll feel the dividend snowball really start to take place. But for me specifically, it was really when the portfolio started to pay me on average $100 per month in dividends, $1,000, and then $5,000 and beyond. Those are some of the specific moments I remember in looking back in time where I really thought to myself, this dividend snowball is starting to snowball out of control. So now that we went over the dividend snowball and I share with you some specific insights from my journey of investing and building a long-term portfolio that is currently snowballing out of control, I lastly want to hear from you guys down below. What are some of your biggest milestones you felt when it comes to your long-term dividend investing journey? Drop them in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.